For the Chapter 6 and 7 integrative problem, obviously Chapter 6 and 7, our focus were on the deductions, so that is where a majority of the work is going to come into play for this problem. We have our taxpayers. They're married. That gives you your filing status, which is going to be married filing jointly. It says we have 2 kids under 13 that qualify as their dependents, so that, should tip you off. You're going to have multiple exemptions, meaning you're going to have 4. They're under 17, so you can take the child tax credit, okay, so kind of keep those things in mind. It says that Josh is a self-employed landscape artist. He earned $150,000 of revenue and incurred $100,000 of deductible business expenses. So for business, obviously the revenues are going to go into gross income, so the revenue is going to be taxable. Then, if you have business expenses that are ordinary, necessary, and reasonable, you are allowed to deduct those. So in the problem, I tell you that they are deducted. So basically, you're going to be able to subtract the $100,000 of business expenses from the $150,000 of business revenue, leaving you with net business income of $50,000. And the net $50,000 of business income is what we are going to include into gross. Tells you that self-employment tax totaled $6,000 for the year. And for the self-employment tax, you're actually going to do 2 things with the self-employment tax. Half of the self-employment tax you are going to get to take as a deduction for AGI. But in addition, self-employment tax is an additional tax that you pay. So you'll notice after I calculated tax liability, I added in the full amount of the self-employment tax because this is an additional tax. So whenever you see self-employment tax, 2 things happen. The entire amount is an additional tax that you pay, then half of it is allowed as a deduction for AGI. Then it says we paid $2,000 in health insurance premiums. So this is a medical expense. However, because Josh is self-employed, we are allowed to take the $2,000 in health insurance as a deduction for AGI. So as a deduction for AGI, you are allowed to take the full amount of the self-employment health insurance. It says that Megan is a nurse. She earns taxable salary of $34,800. That's going to go into gross income. It says that they incur $5,000 of child care expenses. Having a child care expense is going to allow for us to calculate a dependent care credit. So a dependent care credit is coming from the amount of actual child care expenses that were incurred. It says during the year they received $1,600 in reimbursement from their medical plan, and then they had $2,200 of investment income that's taxable interest and dividends. So the $2,200 of investment income is going to go into gross. They have gambling winnings of $1,000. That's taxable. That's going to go into gross. And then it gives us a couple of deductions. It gives you that we paid $6,000 in alimony and $12,000 in child support. So at this point, we are going to be able to calculate adjusted gross income. So as far as your income items, you have the $50,000 of business income. That's coming from the $150,000 of revenue minus the $100,000 of expenses, so $50,000 business income. You have her wages, taxable. You have the investment income, which is interest and dividends, that's taxable. Then you also have the $1,000 of gambling. So that leaves you with the $88,000 of gross income. Then from gross income, you want to subtract the deductions for AGI. So make sure you understand what goes into this category. So out of the information presented, alimony is a deduction for AGI. Half of the self-employment tax is a deduction for AGI, as well as the self-employment health insurance. Once I subtract out my deductions for AGI, that leaves me with an adjusted gross income of $77,000. From AGI, you're going to subtract 2 things. You're going to subtract your exemptions, then you're going to subtract either your itemized deductions or your standard. So the majority of what we're going to look at next is how are we going to calculate the itemized deductions. Now, itemized deductions, it's easy if you can kind of break it down into the categories. So if you'll see here, I have broken my itemized deductions down into the categories of medical expenses, taxes, interest, charitable donations, miscellaneous deductions that are subject to the 2% limitation, and then the miscellaneous with no floor limitation. So let's now look back at the list, kind of talk about whether we think it's our deductible or not, and what category it's going to go into. Top of the list talks about automobile insurance. We didn't talk about automobile insurance, not deductible. Homeowners insurance, not deductible. Life insurance, not deductible. Disability insurance, not deductible. Country club dues, not deductible. Hospital, yes. Hospital would be a medical expense. So I'm going to make a notation. I get to take it as a medical expense. Going to the doctor and paying $2,275 out of pocket to go to the doctor, medical. Chiropractor, we can take that as a deductible medical expense. Dentist, medical expense. Prescription drugs, medical. Elective cosmetic surgery. The term elective lets you know that they chose to have the surgery and it was not medical. So that is not deductible. Over-the-counter drugs, not deductible. Federal taxes withheld. That's a prepayment. So we don't get to take it as a deduction, but we do want to remember it because we get to subtract it as a prepayment of income tax paid. State taxes withheld, we get to deduct it under taxes. Property taxes, get to deduct under taxes. Investment interest, we can deduct as an interest, but there is a limitation, and we'll talk about that in a minute. Is limited, okay? Home mortgage interest, get to deduct it under the interest category. Real estate taxes, it's another tax. We can take a deduction for charitable donations. So this is going to be a donation. We can contribute clothes at fair market value. That's also a donation. Then we have investment advice. This is basically meaning you go to a financial planner, you go to a bank, like an investment banker, and you ask them for advice on what kind of investments you should make, or is this a good investment? So that is going to be deducted as a miscellaneous 2% itemized deduction. Okay, so it is an investment expense. And remember, investment expenses other than interest are going to be classified as a miscellaneous 2%. Same thing for a subscription to the investment journal. It's an investment expense. We can deduct it, and it's considered miscellaneous 2%. That's the category it's going to go into. Dues to a professional organization. This would be considered an unreimbursed business expense, so it goes into the category of miscellaneous 2%. Attorney fee for tax advice on a dispute with the IRS. Again, remember that most legal fees are not deductible unless you're having to pay that attorney to give you tax advice. So if you are in a dispute with the IRS over taxes, you can deduct. Now, safe deposit box is also a miscellaneous 2% itemized deduction. It is also considered an investment expense. Tax prep fees, miscellaneous 2%. Gambling losses, we do get to deduct this, miscellaneous to extent of winnings. So you can deduct it as a miscellaneous, no floor, however, you can deduct to the extent of winnings. Union dues are considered miscellaneous 2%. They're considered an unreimbursed employee expense, as well as a uniform. And again, a nurse's uniform, scrubs are considered a uniform. So now that we've gone through this long list and determined what's deductible, not deductible, and what category it goes into, now I want to bring you over here to the actual solutions, kind of walk you through what we did. So everything that we determined to be a medical expense, we added together. Okay, so everything I labeled as medical, I added up. Now, remember in the problem it told you that we received a reimbursement. If you receive a reimbursement for medical expenses, you've got to subtract that, because remember what you're deducting is the amount of unreimbursed expense. So here's the $1,600 reimbursement. Then, remember, you have to subtract 7.5% of AGI. Okay, so you have to subtract 7.5% of AGI. Anything remaining is what's included as an itemized deduction. I've done the same thing under the taxes category. Anything on the problem I labeled as taxes, I added together. So that gives you 6,305. Then for interest, home mortgage interest, you can deduct. No issue. Now we need to talk about the limitation on investment interest. Okay, so we have investment interest expense, and it's limited. Remember that if you take all your investment expenses, which would be investment interest expense plus those other investment expenses, combined, you cannot deduct more than what you have income. Okay, so we said over here that our investment income was $2,200. So that's the maximum amount of deduction you can take. Okay, so kind of keeping with that thought, let me bounce down here to miscellaneous 2%. Okay, so everything I labeled as miscellaneous 2% is down here in this category. There were 3 items that we labeled as miscellaneous 2% that are investment expenses. We had investment advice, we had journals, and we had the safe deposit box. So if I add these 3 numbers up, this gives me $725 of investment expenses. This is $725 in deductions. Okay, so I'm already deducting $725 of investment expenses. My investment income is only $2,200. Okay, so if I have $2,200 of investment income, and I'm deducting $725 of other investment expenses, that means the maximum investment interest expense I can take is $1,475. Because your investment interest, okay, this is your investment interest expense, is $1,600. These are your other investment expenses. Combined, the total expense is $2,325. Well, you can't deduct $2,325. $2,200 is your maximum deduction. So you're limiting how much investment interest. Okay, so basically you've got $2,325 of expenses. You can only deduct $2,200. So you have an excess of $125. Okay, so you have an extra $125 of an expenses that you cannot deduct. So investment expense is $1,600. There's $125 that is not deductible because of your limit. So your max deduction is $2,200. To make that work, you'll deduct $725 of other expenses as miscellaneous 2%, and that caps you at $1,475 as far as how much as you can deduct under the interest category. Okay, so there's where your $1,475 is coming from. Gives you total interest. Donation, add up everything we said was a donation, miscellaneous 2%, add up everything we said was miscellaneous 2%, and then from that you do have to subtract 2% of adjusted gross income. Gambling losses, you can deduct gambling losses to the extent you have gambling winnings. So your gambling loss was $1,650. You only included $1,000 of income, so that means you can only deduct $1,000 of gambling losses. So then you just want to go through and add up total itemized. That's going to give you total itemized deduction of $26,260. That is obviously greater than the standard deduction amount. So subtract itemized deductions, subtract exemption, gives you taxable income. Use your tax rate table to come up with tax liability. Okay, so use the tax table to come up with the 4521. Add to it self-employment tax. Then you want to subtract any credits. So your credit, you've got 2 kids under 17. AGI is less than 110, so no phase-out limitation there. So you can deduct the full $2,000 of child tax credit. For your dependent care credit, remember you can take a credit for 20% equal to a maximum of $6,000 of expenditures. We didn't spend the full $6,000 for child care. We only spent $5,000. So your dependent care credit comes from taking 20% times the amount you paid of $5,000. So there's a $1,000 child tax credit. And then you get to subtract out your federal withholding And after all that, you still owe $21.